It's not a problem to own real estate, but they were just like, why are you buying so many properties or and managing properties and doing these other things? I started forming LLCs and all the red flags, and I got thrown into they have a risk team that monitors like all this stuff. And so I got thrown in some meetings and they were getting on to me. And I just reached this point where it's like, I probably need to quit. Like it's time for
Yeah.
me to move on and go full time into this if this is what I'm really going to do. And so that's how it got started.
Welcome back, friends, to the Commercial Real Estate Unfiltered podcast. Today, our guest is Kenny Bedwell. He's a real estate investor, data analyst, and host of the Cashflow Positive podcast. With over 8 years of experience in market analysis and deal structuring, he's helped more than 300 clients acquire short-term rental opportunities that deliver strong cash flow. A former data analyst at Citibank, Kenny brings a data-driven approach to real estate investing, identifying high-performing opportunities often many people overlook. His podcast is ranked among iTunes top 30 entrepreneur shows. That's pretty incredible. Kenny, welcome to the show. Thanks for being here.
Yeah, super excited to be here. Thanks for having me, Caleb. Really
Yeah,
excited.
so to give us a little bit of story and some background on your journey from being a data analyst, and obviously that's a huge part of a deal, but some people just think about the fluff and I'm going to do a short-term rental, I'm going to build a hotel or whatever. But maybe tell us a little bit about your journey, how you transitioned from data analyst into real estate investing.
Yeah, absolutely. While I was working at Citibank, I wanted to get into real estate investing. And I started watching a ton of YouTube videos, going on Bigger Pockets, like a lot of people, and just getting educated in what was out there. And this was back in 2016, 2017.
Okay.
And I bought my first duplex and I wanted to house hack. We lived in one side and rent out the other side. And there was this guy I ran into, and he was like, "You should throw it on Airbnb." And I'm like, what? Like strangers coming and staying? I don't know how I feel about that.
Yeah.
And he was like, look, I have a property in the same area and it's doing really well. He's telling me the numbers. I'm a numbers guy. And
Yeah.
so that's how you push my buttons. If you're like, hey, here's what this property is going to make and it's incredible, I'm like, okay, you have my attention.
Yeah.
My wife and I had stayed at Airbnbs before at the end, so it was still relatively new. It was starting to get a little more mainstream. And so I was like, okay, maybe it's something I can try. And we did. And we ended up making, we lived in Buffalo, New York at the time. And this duplex, this unit as a long-term rental could generate about $700 a month. And that was like big
Wow.
rent for us at the time. But the Airbnb, as an Airbnb, it was making, I kid you not, $3,000 a month.
Wow.
Yeah, $3,000 a month. This little tiny two-bedroom, one bath in our suburb town. And this is during the time where you could throw anything up on Airbnb and rent it out, and it would just make crazy money.
Yeah.
There's no regulation, there's no like competition. It's just throw some IKEA furniture in there and get it
Yeah.
going. So yeah, so it was like I'm like, holy crap, I need to do this again and again. And I kept doing it. And I ran into a problem with my job where my boss knew I invested in he even owned real estate. It's not a problem to own real estate, but they were just like, why are you buying so many properties or and managing properties and doing these other things? I started forming LLCs and all the red flags, and I got thrown into they have a risk team that monitors like all this stuff. And so I got thrown in some meetings and they were getting on to me. And I just reached this point where it's like, I probably need to quit. Like it's time for
Yeah.
me to move on and go full time into this if this is what I'm really going to do. And so that's how it got started. Was
Yeah.
this like falling into it? And I'm very conservative from a risk standpoint where I sat back at the time and I could do this where I could say, look, this doesn't work out. I'll just long-term rent the property. And I
Yeah.
said that for the second one and the third one. And then when I was managing people's properties, I was like, if it doesn't work out, I still have my properties.
Yeah.
And so it was like this kind of this conservative approach until I got to a point where I'm like, I'm buying properties and in different states now and just bought a hotel in New Orleans and the risk is out the window at this point. Yeah.
That's pretty incredible. And I know that a lot of our listeners have obviously stayed in an Airbnb, very familiar with it. But at least in the Colorado market, we've seen a huge change because it does drive up housing prices.
Yeah.
And I know some of the investors that listen probably have Airbnbs as well. But for those listeners who maybe need to understand Airbnb a little bit more, obviously it's not the free for all like it was before. There's a lot more restrictions. So how has that kind of affected you in how you strategize on properties and short-term rentals?
My theory, so first off, I'm actually really pro regulation, but I'm pro regulation in markets where it is a vacation area because the cities and towns are smart enough to know that they shouldn't ban short-term rentals because they
Hmm.
provide economic value to
Yeah.
the community. And there are tons of places where they just straight up ban it. And those are places I don't look to invest.
Yeah.
That's
Yeah.
number one. So for example, in Colorado, I used to live in Broomfield
Yeah.
in the northern suburbs of Denver. And I'll actually be out in Colorado next week speaking at
Nice.
a STR conference there, but in Denver. But Colorado, like the Denver area, it's a city. People
Hmm.
have to have housing, live in, and sure, we can have short-term rentals, but it needs to be, in my opinion, it needs to be regulated. But when we get outside of that in some of the vacation areas, I think that's where you got to be careful. It's still, especially in Colorado, it's even tricky,
Yeah.
like Breckenridge and
Yeah.
Vail and some of these ski markets. It's like you can only rent out a certain number of days of the year. But I'm really looking for these communities where there still are rules that can protect me as a rental to
Mhm.
impede just all this competition coming in,
Yeah.
but yet still let it make economic sense for me to run as a short-term rental. So sometimes it doesn't work out in some of these areas, and other times it does. I have property in New York, and New York is in a sense similar to maybe a Colorado or
Yeah.
California with some of the regulation for housing. And I have to get environmental impact reports for my
Mm.
properties.
Wow.
Residential homes, I have to get an
Wow.
environmental impact report that says I'm not going to impact the environment as a short-term rental. Like,
Interesting.
it's a
I did not
weird
know
hoop.
that.
But
That-
man, one of the properties I bought 3 years ago, and it's not like this thing appreciates. It has appreciated, but it's not. It's like it would be that much more. But I bought it for $350,000. I put 100K into it, design, decor, amenities, all this great stuff. This year and last year too. I've been running it for 3 years. I will make so I grossed this year. I'm going to gross
Mm.
$144,000. I will net $80,000
Wow.
on this $350,000 property.
Wow. In a
And
year.
this is in a lake market in New York.
Wow.
Crazy regulations, environmental impact reports. I got to
Yeah.
do all this every 2 years. My second year is coming up. I got to do it again next year. I have all my stuff saved. I just copy, but I'm like, for 80K, what outfit, what costume do you want me to wear when I submit this?
Right.
Like, I don't really care. Like, it just, yeah. So it's worth it, but it
Yeah.
keeps other people out and allows me to
Yeah.
generate this kind of income without having to worry about that competition.
Yeah. So when we talk about Airbnbs versus, say, a boutique hotel, which investment wins there? What are the differences between the performance differences between the two different models?
Oh, yes. Hotels are another monster. I think so. It really depends on the investor's goals. So, for example, let's take the property that I bought for the $350,000 property. I put 100,000 into it. I'm netting 80K a year. Those are fantastic returns. But I said something at the very beginning there that maybe you caught or maybe you didn't. And I said, it's not really appreciating that much
Yep.
because short-term rentals are not considered a separate asset class.
Mm.
And they meaning like you can't get a short-term rental to appraise based on purely income.
Yeah.
It's
Fair.
based on comparable single-family homes, primary residences usually in the area.
Yeah.
Vacation markets is a little trickier, but it's all relatively the same. And so the advantage of moving to boutique hotels is now it's based on a cap rate. It's based on
Hmm.
your NOI. It's based
Yeah.
on the income
Yeah.
that the property can produce. So if you're really good at increasing the income, then you can get that property to appraise for a lot more. So let's take an example of my property, the hotel I bought in New Orleans. So we bought this hotel for 1.5 million and it was a dump. To keep it lightly, there was prostitution and drugs going on in this hotel. It was a Motel 8 to this dream. I was actually wanting to stay a night there just to experience and I left. Blood stains on the sheets, like
Wow.
the smoke detector was like dangling on like its last life on the wires. Like it was awful. And I'm like, I'm not staying here. Sketchy people outside. Like I was like, I'm not staying here. But it's in such a good location. It just needed that vision and that improvement. So we did a renovation on it and I got it up and going. And it's going to appraise for $4 million.
Wow.
Okay. But
Wow.
here's the thing. If I look at just my net cash flow in this hotel, okay, so my net cash flow in this hotel is about $70,000, $75,000. That doesn't compare to my 350K house that's netting
Right.
80K. And I only had to put $100,000 into it. I had to do an $800,000 renovation on
Yeah.
this hotel in New Orleans, like down like by the French Quarter. And
Yeah.
I'm only netting 75, 80K on top of everything else. But I don't care about the cash flow. I care about the appreciation. That $4 million valuation
Yeah.
is what I care about.
Yeah.
That's where the money's made.
Yeah.
And
The
so
equity.
that is the big difference between investing in short-term rentals and investing in boutique hotels is
Yeah.
the appreciation.
Yeah.
And in my opinion, as we scale as investors, we need to be scaling into appreciating assets. And it's not, I still buy short term rentals. I'm
Yeah.
actually trying to buy one before the end of the year so I can get some tax savings. And that's a whole nother topic too. But the hotel side is just a completely different animal,
Yeah.
not even from an operation standpoint, but from just appreciation standpoint.
Yeah.
And
That
that's
makes
where real
sense.
wealth is made.
Yeah. So what do you see like post-pandemic, the future of short-term rentals? I feel like they went through the roof. It was like the hottest thing. But what are some of the trends, the risks, the opportunities that are you're seeing in the STR world?
Yes, the STR world is maturing and we're seeing a lot of competition, a lot of people coming in and starting to throw in big money on design, decor, and amenities. And so when I work with investors one on one, I tell them, look, if you're not willing to invest into those three things, like design, decor, and amenities, don't enter the space. You're going to have a hard time. You're probably going to lose money, actually. But the people who are investing in those things are making more and more money. Another example, last year I bought a property in Kentucky on the Bourbon Trail. And this is, I think, Napa Valley, but for bourbon drinkers. 50, 60 distilleries in the area. People can drive around or whatever. And I bought this property for about 1 million. And we put in over, and this is after the down payment, we
Hmm.
put in over $400,000 into this property.
Wow.
And this is not just, and we didn't touch the bathrooms, we didn't touch the kitchen, we didn't do any heavy renovations or updates to the property. We just added amenities and did some flooring and some landscaping and improved some of the indoor things. But it's a huge property. It's 9,600 square feet.
Wow.
But this property has a theater room, a yoga studio, a gym. It's got this. Converted the three-car garage into this really cool game room and hangout space with a golf simulator, pool table, air hockey.
Wow.
It's got not one but two hot tubs because this place sleeps 28 people. It's got a heated
Wow.
pool, two ponds on it that you can go kayaking, canoeing, fishing. We stocked it with fish. It's got a frisbee golf course on it because it was on 5 acres, chipping green, and a mini putt bourbon
Wow.
themed trail course. It's really got horses and barrels and stuff you can put on and everything. It's crazy. It's like a little micro resort, like a mini resort. And that property, by investing that much, that property in the first year, so we got this all going, it hit its first year. It did $375,000 of gross income. We netted
Wow.
about 175K.
Wow.
Okay,
Wow.
a cash flow play. The appreciation, we bought it for 1 million. We actually bought it a little bit under the market, which was nice. And it appreciated to about 1.6 is the last appraisal we got. Remember, we put in 400K, so we got about $200,000. We can't really pull that out.
Yeah.
Okay, we can't, we could, but we're not wanting to. We're trying to keep our debt service low. But the point is, when you invest into the short-term rental space today, you can make that kind of money. But
Yeah.
I know people who they want to walk in and they just want to buy a property that's already a short-term rental. They don't want to put any money into it.
Yeah.
And then they call me up a year later and they're like, I'm not getting any bookings. I'm not making any money. What's
Yeah.
going on? And I'm like, look at your property. It's
Yeah.
average. You can't have
Yeah.
that.
Yeah.
So,
And I think too, post COVID, I've even in the retail, the commercial real estate market and retail, how much retail has changed and shifted to these
yeah.
experiential type
Yep.
situations.
Nailed
And
it.
so that's what it sounds like to me is like after we were locked up for months, right? It's like we want to go out and experience the world. We want to, when you
That's a good
book an
way of putting
Airbnb,
it. Yeah.
because the thing is, you can book a hotel room, right? And it's basic, whatever. What sets your property aside? A
Mm.
hotel doesn't have a golf simulator.
Right. Yeah,
And
exactly.
they don't have the acreage, they don't have the amenities, and especially to be able to have a group of 20 plus people be able to get together and have a great time, it's about the experience. And so it seems like that's one of the things that's really shifted. And are you seeing certain cities or markets really performing better than others right now?
Absolutely. That's one thing in our space too. A lot of people, they get online and they Google what are the best markets to go to. And there might be some data providers that have lists. My company, I have also a company too that specializes in this. We put out lists as well. But a lot of times people do what I call following the herd. They hear about somebody investing in this one market and they go to look and invest there too. And it's probably some big vacation market. Think like a Miami or
Yep.
Nashville or Scottsdale or whatever. And they chase these markets without knowing how to underwrite or knowing the numbers of these properties. Here's a fun fact for you. There's over 12,000 vacation markets in the United States. 12,000. I
Wow.
don't know what all 12,000 are. I mean, I could
Yeah.
pull up a list but I don't know those places. And as human beings, we run into this issue of we only know what we know. And so if we hear about some place our friend told us, then we're going to go look there. So for me, it's looking at two key elements to find new markets. And or data points. Those data points are what are the housing prices or median listing prices in those markets?
Mm.
And what is the average revenue of short-term rentals in those markets?
Yeah.
And that usually helps reveal markets that are still vacation markets, like the Kentucky Bourbon Trail, which has become a hotter market as of recently. There's Kentucky. We can just start. Remember, there's 12,000. We
Right.
start from the top and go down. But I really like out. But here's overarching formula that I found that's successful: drivable markets within 1 to 2 hours of at least one or two major cities. Everybody's got. So, Caleb, I think you're in Colorado, right?
Correct. Yep.
What part of Colorado?
I'm in Castle Rocks, right between Denver and
Okay.
Springs.
So perfect. I can actually relate and we can use it as an example. Everyone, wherever you live, probably near a city, you've got a drivable vacation market that everyone in the city, not everyone, but most people drive to get away. When
Yep.
I was in Buffalo, we had Erie, PA, we had Geneva on the lake, we had Allegheny, we had the Finger Lakes, which if you're not from that area, you don't know those markets, but the
Right.
people there do know those. And so I tell people, look, start where you're at.
Yeah.
And where do people go in vacation on the weekends? So we've got outside of Denver. You're not going to Kansas. But you've got all these vacation markets under the radar markets in Colorado. You go up north, you go around Fort Collins area, you start
Yeah.
hitting the mountains in there, Red Feather Lakes, even oh my gosh, why am I blanking on the name of the national park there?
Rocky Mountain
Oh boy.
National.
Rocky Mountain
Yeah.
around there in those
Yep.
towns in there.
Yep.
The regulations tight and I get it, but there's some towns that will allow it, but there's still opportunities. There's still really good deals. And they're in these kind of still vacation zones, but drivable, all drivable from Denver.
Yeah. Yeah.
And that's where I tell people start there
Yeah.
because those are the hidden markets. It's
Yeah.
not the Nashvilles, it's not the Miamis or the Scottsdales or San Diego or these other places. If you really
Yeah.
want to make money, it's these drivable markets that are 1 to 2 hours outside of these major cities.
Yeah.
Those are where the deals are found.
Yeah. And I would imagine probably even like a town like Breckenridge, with it being very difficult to find something like that, finding another town that isn't as popular or regulated to look for a property, say Dillon, or you're not in the hub
Yeah.
of all of the stuff. Dillon's starting to become a little bit of that now too, but that's a really interesting way to look at it because it's not, like you said, following that herd mentality.
Yeah, no,
Just
it's really
following.
not. And look, everyone's budget is different.
Yeah.
If you look at Breckenridge, you're going to be in we have a client selling a house in Vail right now for 1.8 million dollars. Like that property will not make money as a short-term rental.
Right.
But if that's not your budget, we had somebody buy something actually near Dillon for $700,000, something
Yeah.
reasonable that's going to do really well in the mountains with views, like a 3 bedroom, like beautiful
Yeah.
house. These things are possible. It's just expanding and staying within this radius. It's all about the demand, where people are
Mhm.
coming from and why would they be coming to these areas.
Yeah. What are some other like amenities, not for the actual short-term rental, but like attractions, maybe I should say, that are in the areas? Like for example, Dillon, you've got the outlet malls that are there,
Mhm.
Silverthorne. Are there other factors like shopping and food and that sort of thing? Does that also play into your decision making?
Yes. So the traffic drivers I call them traffic drivers. So like, why are people coming to the market? That's
Yeah.
really important. I'm usually looking for one or two major traffic drivers that bring people to that area besides what I call compression events. So every
Mhm.
area has concerts or sporting events or whatever of big things that people would come to.
Yeah.
So we want to look for those traffic drivers and they can be all sorts of things. They can be, like I mentioned, the Bourbon Trail.
Yeah.
I'm just thinking of Skiing. We have a last property we bought in Arizona. It's in Flagstaff. There's skiing and there's the national parks. That's also another really safe investment play too for short-term rentals is being
Yeah.
near national parks.
Yeah.
You have the data. The government provides you the data for free online of how many people, millions of people per year go to that national park, when they go there, what entrances, all this great stuff. And
Yeah.
then it's up to you to find and identify like the sweet spots. But that's a good traffic driver, a solid
Yeah.
traffic driver that brings consistent demand year in and year out. So there's a lot of different ones, but so when I look for it to invest, I look for why people go there and who is
Mm.
going there.
Yeah.
So is it the people from Denver? What do they like? They're
Yep.
going to be outdoorsy. So like I might put a rock wall on my property.
Right.
Whereas if I put a rock wall on my Bourbon Trail property, that's asking for risk liability, right?
Yeah.
Drug
Yeah.
guy falling off a rock wall on my house. Not going to happen. But it just depends on the market.
Yeah.
Yeah.
Yeah. And how do you use data to reveal some of that hidden potential? Obviously, you're looking at almost like what I would consider like a secondary market, so to speak, or a fringe market to a major city. What are some of the other data that in hidden potential that you can find?
Revenue. So that's really the biggest indicator. It tells you demand in a sense too. This is what people are willing to pay for this area.
Yeah.
And so the thing that I refer to in market hunting is the tech adoption timeline. So the tech adoption timeline, it's with software or whatever. It's like when somebody tries something new, we call them innovators. So the first ones to do something. And then you have what we call early adopters, meaning like they see what the innovators are doing and then they
Yep.
pick it up. And then you have the mass adoption. Everybody's chasing the herd. And then you have what we call laggards. I've heard about it. Now I'm going to join in.
Yeah.
Short-term rental markets are all over the place with this because it depends on when people have heard about them and what's going on. If something gets announced that's new, that's going to blow up
Yeah.
that market. And so I'm not looking to be the first one in a market. I'm
Yeah.
looking to be the second. And so that means that I know that someone's proven out that you can make money there.
Yeah. Yep.
Then I can go in and say, can I do the same or can I top it?
Yeah.
And that's what I'm looking for.
Yeah.
So I'm an early adopter guy. Just like I was an early adopter with Airbnb. I bought something and launched it in 2017. That's the
Yeah.
early adoption phase. Not the innovator. I wasn't the first one. It
Mm.
was the second.
Yeah.
And I think that's the key, especially if we're trying to be a little bit more conservative to our approach here, but also still wanting really good returns, is looking for those
Yeah.
markets that are still popular. They have the drive. Someone's already proven it out.
Yeah.
And it's not a bajillion, it's not hundreds of people prove it out. It's like maybe 5 or 6.
Yeah.
And then you go and you replicate or make better.
Yeah. And it seems to me taking that approach, you also would probably be able to acquire property at a lower price point than if you're willing.
100%.
Yeah. Yeah. So you've made this transition from residential, and you still are obviously doing that, into commercial, but what mindset and financing shifts are needed for investors to make that leap from residential to commercial?
I think it goes back to their goals. What are you looking, what are your long-term goals in a financial sense? And what are you trying to obtain? I think we hear a lot on social media and YouTube, cash is king, and we've got to make this money. And it's almost like a get rich quick mentality.
Yes.
But
Yeah.
really, when we're going to commercial, it's about building wealth,
Mhm.
long-term wealth. And so you've got to have that, you've got to have your goals in mind in terms of what you want to accomplish and what you're trying to achieve. And that will help you realize the runway. I love that New Orleans, the city, hates short-term rentals. They
Mm.
allow them, but they hate them. They make the permitting process really restrictive and it's challenging. They're a pain in the butt to work with. They're a pain in the butt to work with anyway, but not even just for short-term rentals, but for short-term, especially for short-term rentals. I love that as a hotel owner
Yeah.
because I'm doing a
Yeah.
hotel and they make it a lot easier for hotel owners because that's what they want there.
Yeah.
And so the mindset, like it shifts, but in some of these other markets, I'm all 100% short-term rentals. Forget
Yeah.
the hotels. It's because of who and why and what I'm trying to invest in. And
Yeah.
so making that transition, in my opinion, starts with your goals, understanding what you're trying to achieve, and then choosing places that fit that long-term play.
Yeah.
I'm going to be able to rent that. This is going to be a hotel for many years.
Yeah.
Even after I reposition and sell it, it'll still be a hotel and producing income because it's in such a good location. And the city's never just going to, nope, no hotel today. But with
Right.
short-term rentals, we don't know that in a city like New Orleans.
Yeah. Yeah, no, that's great. And in that, I'd be curious to understand a little bit how some strategies that you've had as far as financing. Obviously, you've got cash flow coming from some
Yeah.
residential, but yeah, on the financing side, what are some tips that you've got on that?
Sure. So first off, based on my experience and being able, so my what I do now is I help people find deals, and that's kind of mentioned in the bio. I've helped over 300 people, and then I broadcast the crap out of that.
Yeah.
So whenever I need money for a deal, I just tell people and then money
Yeah.
comes. So I don't actually put in any of my own money into deals
Yeah.
anymore. But that allows me to do syndications. So I have done a few syndications. That allows me to also partner with people and do business deals to acquire. But for funding, I do for short-term rentals, there are some commercial loans out there. We call them debt service coverage ratio loans. It's a
Okay. Yep.
mouthful. So we acronym it DSCR loans.
Yep.
They'll look at the short-term rents and the commercial real estate value, but they'll use the commercial rents to offset. They're not looking at your debt to income ratio to
Right.
cover the property. So someone
Yeah.
like me who's self-employed, who the bank thinks I'm poor because my tax return says I didn't make any money thanks to my
Right.
CPA.
Yeah. Yeah.
Yeah, I've got to
Yeah.
do these commercial type loans when I'm buying the properties or with my business partners. With the hotels, my bet, one learning lesson from this, there's a lot of people out there. They're pretty much hard money loans. You can get a hard money loan any day of the week. They're
Yeah.
easy to find. My recommendation for hotel and commercial investing, find a local lender.
Yes.
They know the area.
Yes.
The terms I got were so sweet. People can't believe it. Even it was the beginning of one of the deals we were looking at was the beginning of this year. And the terms were just amazing for a commercial property.
Mhm.
7.5% fixed rate, 30-year.
Wow.
No arm, right? Yeah, like we had to put 30% down, but these just little things like that. And if you're doing stressed properties that you can force appreciation on,
Yeah.
it's not a big price tag. Long story short, my opinion is start with low, especially if you're in vacation markets, either
Yeah.
hotels or short-term rentals,
Mm.
start with local lenders
Yes.
because they know the market, they know the seasonality, they understand
Yes.
location. Location is a huge piece of this business because it's like the New Orleans property, for example. When we went out there, the lender was like, "Oh yeah, I know the location. That's a great spot." And he just needed to see what our plans were.
Yeah.
He knew the property, he knew the area, he knew the property, he knew the neighborhood, everything.
Yes.
These national guys are like, we got to dive into X, Y, and Z and blah, blah, blah. And like
Yep.
here, 9%
Get
interest rate on a 5 year. You're like, I don't know about that.
Kenny, I think you hit it on the head there because it's something that I tell my clients all day, every day when they're going to make a purchase. Go to a local community bank that understands the market.
Yeah.
And I had a deal, I don't know if I've shared this on the podcast before, but I had a client a few years ago who was buying a restaurant that
Okay.
was cash flowing. He was putting 50% down, right? 50.
Yeah.
We're a week and a half away from closing. And this national bank, I won't name them, but they've been in the headlines some over the last few years, hadn't even ordered the appraisal. And they're like, we can't pencil this deal. I'm like, you've got a building that is cash flowing,
Yeah.
has net operating income, and you guys putting 50% down. And they're like, we can't do the deal. So we've got somebody in an office in Arizona trying to figure out what's going on with this property, but they have no idea of what this market is. They don't
Hmm.
know the drivers like you talk about. They're
Yeah.
just going, and to me, I think the data is very important. However, it's got to be mixed with the reality of the market. And so I'm sure like your podcast is one that people can jump on, listen to, and I'd love to hear like how you've helped shape the podcast specifically, how it's helped shape and smarter investors.
Yeah. So when I first got started with my podcast like a year and a half ago, I'd done some other ones with, I was like a co-host on a couple of shows, but I wanted to do my own because I'm very data oriented.
Yeah.
And so people, the other shows I was doing, I was like the data guy, the other guy was like the color commentary. And
Yeah.
it was a good back and forth, but people were like, I just want to hear the data side.
Yeah.
And so I started focusing on telling stories with the numbers, like sharing. I will tell everyone the highs, the lows, the numbers behind it, where I made a mistake, what went right, what went wrong, and the results.
Yeah.
And hopefully I've done that a little bit today for you guys.
Absolutely.
Like I own land in Arizona. I was trying to build a property near the Grand Canyon, and we didn't check the regulation. And
Mm.
we submitted all the plans, bought this land, got everything ready to go, and the county said, nope, can't do that, denied. I was just like, So I
Yeah.
have some empty land sitting in Arizona that probably some squatters are living on, but you know what, whatever. But long story short, the goal of that podcast and everything, and what I try to do is to share experiences, what I've learned, and what I see other people doing too in the space.
Yeah. Yeah, and I think too, having an expert with the fact that you help people accomplish this, I think people need to reach out to you and don't go in it alone. Don't go into it
Yep.
blind just because a friend told you that, oh, I'm doing this property in Florida or whatever. Find someone who's been through it, done it, and they can walk you through it. And it's just like having an attorney review a lease. You spend a few $100. There's a cost associated to it. What that is preventing down the road. And we try to share as often as possible on this podcast about the importance of due diligence and the research.
Yep.
Before you put pen to paper, before you write a check, make sure you've got someone on your team who can help you do that. But Kenny, where can people find you?
Yeah, I like to be, and maybe this is a bad thing, but I like to be accessible. My goal, I'm an investor. Of course, I have my own company and I have my own team and stuff, but I'm also an investor, and most of the money I make comes from my investments. So I'm not sure, yeah, everyone's looking to make more money, but the reality is I really enjoy helping people and teaching people and sharing experiences to help them not make mistakes. And so I try to be accessible. So I tell people, if you want to reach me, you can just go on Instagram or Facebook at Kenny_Bedwell. It's spelled as it sounds.
Yeah.
And you can reach out to me and message me. I'm happy to chat with you and give you resources, give you thoughts or opinions or point you in the right direction at the very least. And that's just at Kenny_Bedwell. And then my website, company website, if you want to check us out, is STRinsights, INSIGHTS.com, STRinsights.com.
Awesome. Man, thanks so much for giving us so much unique perspective. And I always love when I come on a podcast and learn something new. So thanks for joining us. And I look forward to continuing to have conversations in the future.
Yeah, thanks for having me on.
You bet.
If today's episode gave you valuable commercial real estate insights, subscribe, rate, and share it. Connect with me and the David Commercial Real Estate team through the show notes. Remember, real estate is more than buildings. It's about building community. See you next time.